Lecture Series 17 of Bite-Sized Corporate Reporting will focus on IAS 24 Related Party Disclosures. This is a three-part lecture series. IAS 24 shall be applied in identifying 1. Related party relationships and transactions, 2. Outstanding balances including commitments between an entity and its related parties, and 3. Circumstances in which disclosure of related party relationships, transactions, and outstanding balances is required. IAS 24 shall also apply in determining the disclosures to be made in relation to those related party relationships, transactions, and outstanding balances. It is important to note that related party transactions are a normal feature of commerce and business. Example being, entities frequently carry on parts of the activities through subsidiaries, joint ventures, and associates. In such circumstances, the entity has the ability to affect the financial and operating policies of the investee through the presence of control, joint control, or significant influence. Related parties may enter into transactions that unrelated parties would not. For example, a subsidiary selling goods to its parent at cost, which is unlikely to be the terms for another customer that is an unrelated party. This means the related party relationships could have an effect on profit or loss and financial position of an entity. Therefore, knowledge of an entity's related party relationships, transactions, and outstanding balances enables users of financial statements to assess the effect on profit or loss, financial position, risks, and opportunities facing the entity. Question: what are related party transactions and who are related parties? According to IAS 24, a related party transaction is a transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether a price is charged. A related party is a person or an entity that is related to the reporting entity. A reporting entity is the entity that is preparing the financial statements. IAS 24 stipulates a person or a close member of that person's family is related to a reporting entity if that person either has control or joint control of the reporting entity, has significant influence over the reporting entity, or is the key management personnel of the reporting entity or the parent of the reporting entity. Key management personnel are those with the authority and responsibility for planning, directing, and controlling the activities of the entity directly or indirectly. This includes any director, whether executive or otherwise, of the entity. Close members of the family of a person are those who may be expected to influence or be influenced by that person's dealings with the entity and include the person's children, spouse or domestic partner, children of the person's spouse or domestic partner, dependents of that person, or dependent of that person's spouse or domestic partner. The second part of Lecture Series 17 will look at situations an entity is related to a reporting entity. Till next time, thank you.